Welcome back to the deep dive. Our mission, as always, is pretty simple. We take one specific story, one set of facts, and we unpack it. The goal is to get you up to speed fast. Okay, let's unpack this. Today we are diving into APAC real estate. But we're getting really specific looking at this high stakes world of extended stay corporate housing. Our whole focus is on one single sale, the Avenue Serviced apartment building, right in the absolute heart of Hong Kong Central. So the big question is, what can a, what is it, a HK $240 million property sale?
Mm.
What can that really tell us about the future of business accommodation in the region?
It's a perfect case study, really, because this one deal, it puts a price tag, a very specific Hong Kong dollar price tag on comfort and convenience for the corporate world.
Mm,
We're living at a fascinating moment here. You have a big U.S. private equity firm, AEW, making their exit.
right.
And then on the other side, you have a local investor coming in saying, I'll take that,
Mm.
and I'm holding on to it for a long, long time.
Two very different strategies colliding.
Exactly. What's fascinating here is how the details of this deal, I mean, from the refurbishment strategy to the rental premiums, they paint such a clear picture of what extended stay comfort is truly worth. For these top-tier professionals moving through a hub like Hong Kong, places designed for stays longer than just a few days.
Yeah.
Well, they're not just a nice-to-have. They're
Yeah.
basically essential infrastructure.
Absolutely. Okay, so let's get into the hard facts. The who, what, and where of it all. The seller, as you said, was the U.S. private equity firm AEW. And they sold the Avenue Service apartment building
A property they completely transformed.
completely. And the location, I mean, you really can't overstate this. It's at 31 Wyndham Street in Central.
Hmm.
So you've got the huge financial engine of the Central Business District right there. But you're also literally steps away from the social scene, Lan Kwai Fong, Soho. It's that work-life balance built right into the address.
It is. And for the target tenant, that's not negotiable. It has to be there.
And at the price. The headline number was HK $240 million.
Which, just to put a global number on it, comes out to around 30.66 million US dollars.
So not a small transaction.
Not at all. And if we connect this to the bigger picture, you see a couple of things right away. First, it shows there's still a real appetite for these prime income-generating assets in big global cities. It's selective, but it's there.
And the second thing,
The seller, AEW, played this perfectly. It's a classic value-add strategy. They bought the building when it was still the Mood Hotel.
right back into 2015.
Exactly. For about HK $220 million. They came in, they refurbished it, got the income stream stable, and then they made their exit. A quick, very profitable turnaround.
Which then brings us to the buyer, because this is where the story gets really interesting, I think. This signals real confidence.
It does.
It wasn't some other big fund looking to do another flip in a few years. Our sources say it's a local individual investor.
And that's key. A local committing to a long-term hold, even in a market that's seen some caution lately.
It's a huge vote of confidence.
It's more than that. It's a belief, a deep belief, in this very specific niche. Not just Hong Kong real estate in general, but in high-end, serviced corporate housing in Central. They're betting this thing is going to be a cash machine for years.
And that bet is really based on the success of the whole service department strategy that AEW put in place. They didn't just give it a new coat of paint.
No, they fundamentally re-engineered the building's entire purpose.
Yeah.
And this is a really important insight for anyone tracking corporate accommodation trends.
Mm-hmm.
Why is this model so popular? It's because it removes all the friction of moving for very, very busy people.
Exactly. So let's get into that repositioning, because that's where they really unlock the value. They took this former hotel and, after a lot of capital investment, created the Avenue. And the physical details, they really tell the story.
They do.
It's a 14-story building, just under 9,000 square feet in total, but, and this is the crazy part, in a city like Hong Kong, which is all about density, they went the other way. They slashed the number of units. It now has only 11 serviced apartments. That feels almost like creating artificial scarcity.
That's precisely what it is. And that scarcity is the luxury. The real hook, the boutique detail, is that each of those 11 apartments occupies an entire floor.
An entire floor. Just think about that for a second. The privacy, the exclusivity.
For a high-level finance professional who might be under a lot of scrutiny, having that kind of control, that guaranteed anonymity, you can't put a price on that. Well, actually, you can, and it's a huge premium.
And what about the apartments themselves?
They're a good size for Central. You're looking at between 57 and 68 square meters. So these aren't just tiny little hotel rooms. They're proper living spaces built for someone staying for A few months, not a few days.
Which brings up a really important question. In a world where we're all talking about flexible work, hybrid models, people working from anywhere, why does a product that is so centralized, so amenity-rich, still command this much attention from a long-term investor?
It's all about the target audience.
Right. The sources are clear on this. This is aimed squarely at working financial professionals, the people driving the big corporate deals in Central.
Exactly. And if you're on a 6-month contract and your brain needs to be 100% on the job, the last thing you want is to deal with landlords or utility bills.
You need a living situation with zero admin.
Zero. And that's what Serviced means here. It's not just a fancy word. It's a promise to remove all the daily hassles.
So you get daily housekeeping.
Daily housekeeping, complimentary high-speed internet, the absolute must-haves. And then there's a restaurant on the ground floor. It's all about creating this seamless, low-friction experience for someone whose time is their most valuable asset.
Okay, speaking of value, let's look at the financial proof. The real test of this whole strategy isn't the design, it's the rent they can charge. And the numbers. They're pretty compelling.
They really are.
The average rental rate for a unit is HK $52 per square foot.
Now, that might sound like just a number, but let's put it in context. The average residential rent for a normal apartment in that same area is about HK $40 per square foot.
So we're talking about a premium of, what is that, about 30%?
Roughly 30% higher. And that 30% buys you a lot. It buys you the one apartment per floor exclusivity, the daily services, the quiet. It buys you the ability to walk out your door and be in a boardroom in 5 minutes without ever thinking about a lease.
And in real money terms, what does that look like per month?
The monthly rents for these units range from HK $32,000 up to about HK $43,000.
Yeah.
You can see why the new owner was interested. Those are very strong, very stable rental yields.
Okay, but this is where we have to add a layer of complexity. Because it wasn't a completely smooth ride. This premium asset, it wasn't totally immune to what was happening in the broader market.
No, it wasn't. Price expectations and market reality are two different things.
For sure. We know from our sources that AEW, the seller, was initially looking for a much higher price. They were asking HK $280 million the year before.
A huge difference. That's HK $40 million more than what they ended up getting.
So what happened?
That gap, that HK $40 million, is a clear signal from the market. They had to adjust their expectations down because the Hong Kong market, especially in the second half of that year, it slowed down. The seller had to get realistic about the timing.
Right.
And we had a representative from Colliers, Antonio Wu, who sort of confirmed this. He mentioned the final price was below HK $250 million, which lines up perfectly with that HK $240 million figure. It was a market correction baked right into this one deal.
But wait, this is where it gets interesting because you have to think critically here. If the market was slowing down that much, why didn't the price fall even further? What put the floor under the value?
Because the asset itself is just fundamentally resilient. That's the key.
Okay.
So even though they had to drop the price from $280 down to $240, the sale still gave them a solid profit on what they paid back in 2015.
Which was HK $220 million.
Exactly. So they still came out ahead. And it's because this specific asset class premium, serviced, extended stay for finance pros, it's what economists would call inelastic. The demand doesn't just vanish when the market gets a little shaky.
The need for that kind of high-touch, centralized convenience is always there for a certain group of people.
It's always there. And the local investors saw that. They recognized that the long-term income from this building is going to be incredibly stable, regardless of short-term market noise.
And that really is the key takeaway, isn't it? This whole deep dive shows that even when a market is cooling, these very specific premium serviced apartments targeting a niche like finance professionals, they still perform incredibly well.
That 30% rental premium tells you everything you need to know.
So what does this all mean for you, the well-informed learner? It means that when you're looking at real estate, you have to look past the general headlines. These strategic, specialized assets, the ones built for extended work stays that provide flawless service. They hold a premium value that can ride out the waves.
The investment in that level of service is absolutely justified.
It is. The yield proves it.
And, that brings us to the final big question about the future. We've just spent all this time establishing that high-service, exclusive, centralized apartments are incredibly valuable to investors right now.
Right. One per floor, all the amenities.
But the corporate world is changing. So how are companies going to balance this proven need for centralized luxury with the growing demand from their own people for more flexibility, for more geographically dispersed ways of working.
That's the tension right there.
It is. The demand for this product in central Hong Kong is clear today. But the real challenge of the next decade will be figuring out if that kind of luxury and service can be decentralized. That's the space to watch.